Well, this is the Bitcoin Bottom Line live. It's our first live.
Well, it's kind of live.
Well, it's recorded live.
We're in person.
Yes, authentic.
Being recorded.
Yeah.
Live taping of Bitcoin Bottom Line.
At the Bitcoin 2022 conference in Miami, which is actually a great venue. Last year was a disaster in terms of like personal cleanliness. I feel so much classier right now, not sweating through all my clothes.
It's great.
It's great.
And it's earlier in the year too. Usually June in Miami is pretty hot. Have you been to Miami in June?
I haven't been to Miami since I was a young girl, so it's all very new to me. But this is pretty vast. I don't think I've been to a conference like this for a while.
Yeah.
Okay, so introduce yourself to everybody watching. How did you get into Bitcoin? Who is your daddy and what does he do?
I am Jenna Wright, the Managing Director of LMAX Digital. We are an institutional-only spot cryptocurrency exchange. Our core business has been FX for the last 12 years. So we come from the TriFi world, and really we moved into crypto on the back of client demand. So a ton of non-bank institutional clients asking us to replicate our software, so institutional-grade infrastructure, to allow them to essentially offset some of the risk from market making that they were participating in on the retail exchanges.
So how different is the operational day-to-day of a FX market maker versus a crypto market maker, I guess? Because it seems like obviously FX has a lot of volatility because all these assets are sort of just like crypto, they're being traded against each other and all these crazy pairs all over the place. But there's obviously, like you talked about, emerging markets, right? Crypto is like really a totally emerging market. So it's 24/7. It doesn't really ever turn off.
It's very similar though. So the dynamics of us matching a buyer and a seller, it doesn't matter if it's euro dollar, cable, or Bitcoin dollar. It's all very much the same. Just operationally, it's a lot tougher, right? You're 24/7, and our guys were pretty used to sleeping on Saturdays. So there hasn't been much of that going on for the last 5 years. But I think, if anything, the traditional world is going to have to learn from crypto, and we're going to see foreign exchange markets in the next 5 to 10 years trading 24/7. I think they have to move towards that.
Well, you're right. And we're talking about you and FX. You've got a long history in FX. I have a long history in emerging markets, and I did emerging markets when I was in LA. So I had to trade with counterparts in London, in Tokyo, in Hong Kong, as well as New York. So I used to have to wake up at 2:00 in the morning, go to work all day, and then when those markets shut down, I'd still work, and then I'd go take a break, go to the gym, and then come back and then check in on the Asian markets right before I went to bed. So I was kind of used to that from my time there, but this is a whole other thing.
Because it did end on a Friday, right?
It did end on a Friday.
Close of play, and you didn't have to worry about too much until a Sunday afternoon.
Exactly right.
Just the news cycle over the weekend, really, for traditional markets is the only thing that can kind of prime the pump for like a weird Sunday night, Monday morning open, right? But I think with crypto, you could have breaking news at any point, and because people are, I guess there's so few people in crypto relative to traditional finance, right? It's still a smaller market broadly. It's only a couple $1 trillion worldwide. So the volatility, I guess it takes less pressure on the table to tip it in that regard with news or, threats of regulation or threats of, bans and stuff like that.
We still see though that in terms of capacity, breaking news in crypto is very different to non-farm payrolls for foreign exchange, for example. So we can see a peak of 60,000 orders a second in foreign exchange. And that can be just like a normal everyday burst.
Right.
In crypto, a big spike is like 6,000.
Right.
So we're still quite far away in terms of sophisticated technology or what we need to do in terms of sophistication to support crypto.
But I guess the difference is that there's a really established sandbox for foreign exchange, right? And we're still developing that liquidity sandbox, that interchange sandbox for crypto. What are the big obstacles for institutions as they're trying to adopt crypto trading or market making or whatever? Because it's like there's all this stuff about security, privacy, wanting to kind of, I guess as the crypto moves around, it's traceable in a way that you could kind of see people moving things right? And that could be its own news now because people
Yeah.
could be indicated, oh, there's a whale moves, there's $1 billion moving here, there, or whatever. But in traditional markets, that stuff doesn't really affect it as much. But I think people are always, everybody that's in there is digging for something. So does that affect anything at all, or?
I think in terms of barriers, the biggest that we see is regulation as one, and credit intermediation, and the two are still lacking. So in the foreign exchange world, our institutional clients are very used to the prime brokerage model. So one bank will credit intermediate for an institution as to where they want to trade. They just have a net open positions limit. They spray the venues and they'll net off what they have to use. We don't really have that in crypto.
Right.
There are firms trying to offer prime services, but in terms of taking credit risk,
Yeah.
there's no one single household name performing that job in crypto today, and there has to be for asset managers
To
with large
come up
balance
to that, yeah.
sheets to really
Yeah.
enter. Now, we've definitely seen the dynamics change significantly in terms of client type from 5 years ago to today.
Yeah.
We're starting to see some serious names enter the space, but if they don't have similar credit models like they do in their other asset classes, they're going to really struggle to
Get up to speed.
you know, how do you fund a crypto-friendly bank? So I bank with a crypto-friendly bank, or LMAX Digital has a crypto-friendly bank. Now, some of these asset managers are going to have larger balance sheets than those banks. They're going to
That's right.
struggle to fund us at those crypto-friendly banks. It just, they're not going to get comfortable.
Yeah, because the clarity's not there on some of the stuff, right?
Well, I'll give a good example though, right? There's some of the bigger custodian banks are getting into crypto right
Yeah.
now, right?
And that's the solution, right?
That's the solution. I mean, let's take Bank of New York for instance. They're going in very heavily right now. State Street's going in heavily. U.S. Bank is going in heavily.
Yeah.
MUFG already went in heavily out of Japan.
Yeah.
And here in the U.S., those are the 4 largest custodian banks.
Yeah.
You know, and globally they're the largest. But when you can start custodying your crypto at Bank of New York, game changer. You
Yeah,
don't have to worry about that.
100%. And that is what it's what we're out there talking about. We really want that to happen. And I think there are $200 trillion of assets under custody today. Over half of that is managed by the top 3 banks.
Right.
Goldman Sachs.
That's like a staggering
But
number.
Goldman Sachs had a survey out the other day that on the whole said they're looking, the respondents are looking to allocate about 5% of their assets to crypto, right? That's the goal. If you think about 5% of your 200 trillion, suddenly that's 5x the market cap today of crypto. So if we just get the State Streets and the Bonies doing what they do for crypto,
Yeah.
we 5x the market cap just on day one,
Yeah. And
without any other
Right.
participants
Right.
coming to the table.
Yeah, and that's the thing we talk about all the time. And like people that are Bitcoin maximalists say that, oh, Bitcoin's going to drain the optionality of your money, so that people are going to say, like, why would I put money in bonds or something like that? Because I'm basically guaranteeing myself a negative ROI,
Yeah.
right, on a multi-annual basis potentially. Whereas like I can take a small percentage of my allocation, put it in Bitcoin, and then that gives me upside potential, which far exceeds any bond portfolio, right?
I never will, right?
Right. So I think like the 60-40 model's dead. I think you and Greg talked about that.
Yeah.
But there's a lot of stuff that say that like as this whole sandbox is getting clearer and clearer with time, because you have bigger participants willing to be like experiment, I guess, and because they're so big, they have the liquidity on both sides of the trade. And the prime brokers for traditional equities or FX or whatever, I think like the question is, are you going to see the Goldmans and the Fidelities and like these other multi-trillion-dollar asset managers? Are they going to really try to recruit both sides of the trade in crypto so that they can kind of be their own exchanges in that regard? Because that would make sense if they were to buy an exchange. Then they would have a tool that's built out. But to build it out as you go is challenging, and there's a lot of like, I'm trying to think of the right word to say it, like, I don't know, like just friction, like learning friction, right? There's a lot of failure that is required to learn. So you take these very big traded companies right now, and they have a very established thing, and now there's like this complete new crypto circus happening.
Yeah.
And they're like, that looks really fun, we want to play in that, but then that you can't just go on the trapeze and learn how to do a backflip, right? It's just not how it works. Like you have to work your way up. But if they take too long to learn, then they could be
Miss the boat.
obsolete.
Yeah. I haven't even really thought about them owning or buying exchanges. I know that they're definitely looking at custodians. I mean, how long would it take them to build a custodian if they started thinking about that now?
Right.
If you lifted a custodian that you done some serious DD into, you deep dived into the technicalities of how secure. I mean, in 2017, when we looked at launching LMAX Digital, so the fifth exchange from the other 4 FX exchanges, we actually we started looking at the custody piece, right? Because we'd heavily relied on a bank previously to store our clients' fiat. And then you go, okay, what do you do with this? Like the unknown. And it was very hot wallet driven back in 2017.
Right. Yeah.
And our approach was, look, we service institutions in foreign exchange. We're actually not that good at sales and marketing. We're not going to compete with 100 retail exchanges out there. We're going to do what we know that we're good at. We match buyers and sellers of the institutional nature. We ended up building our own custodian because we couldn't get comfortable with
the third party,
what was out there. Now, I think things have moved on significantly. And let's hope that State Street and Boney do their thing and do own that market.
Right.
But we've done the whole insurance piece, we've done the whole audit piece. We're pretty comfortable with how secure and how cold and how frozen our vaults are.
Right.
But it's just different, isn't it? We haven't had to think about these things before. We've just gone, okay, bank 1, 2, and 3, look after our clients' assets.
Right.
Well, these are things that we've always had to think about risk management, right? The thing is, we haven't had to think about risk management in the way that we're thinking about it right now. But that's always been the case. You always have to look at all the risks that are out there. Let's go back 12 years, right? Everybody that traded mortgage-backed securities traded with 2 shops, Bear Stearns and Lehman Brothers. Why? Because they're the biggest. Nothing could happen. Nothing could go wrong. We're going to do all of our trades with them. But if you were a good risk manager, you would say, well, that's 2 points of failure. And we should spread our trades out among a lot of different counterparties to manage that risk, especially if you saw the financial crisis coming, which I was fortunate enough to be with a firm that did see it coming, and we spread out our counterparties among 20 or 30 different trades, just in case that trade got broken in an event that somebody went down. Well, not a lot of people thought about that back then. A few people did, and if you thought about it, you came out looking really good. The points of failure that we have today is custodian risk. That is your counterparty risk that we should all be managing. And if you're putting all your money in one of the largest custodians because, well, they're the biggest, nothing could go wrong. What could go wrong? They have insurance, sure, but a lot of things could go wrong in any custodian, no matter how big they are, no matter if they're publicly traded, no matter if they have a lot of assets on their balance sheet. It could all go away right away, just like Bear did, just like Lehman did. So what we try to do as a fiduciary of other people's money, and I'm sure you do the same, is spread out those assets among a lot of different custodians. By the way, we did the same thing that you guys did. We saw a lot of solutions out there that weren't great. We wanted to further diversify, so guess what? We built our own custodian solution for a lot of the assets that we manage. So I think you guys are on the right track there. But that, to me, is the biggest point of failure, and it has to be managed. What are some of the things that you see as points of failure as far as counterparty risk and other risks?
Just to jump back on that, we are a custodian today, but our core business is we match buyers and sellers, right, in any asset class. So for us, we will always be exchange operators. And I think as the market grows and as we do see more custodians come to play, I envisage a network of custodians where we would just be one of them. And at any point, a fund is probably going to not be allowed to trade and custody with the same venue. And the fund that trades with me can tell me to give up their Bitcoin to whoever's in the network of custodians, and we do that. And it's just a give up. We execute and we pass it back. And as that network grows, we're spreading the risk, right?
That's what I was going to say. So it really, at every layer of it, it really is the decentralization that adds safety to a degree, because you have this distributed risk, right? Which is more legs on the table, right? So you have less likely that one side of it gets too heavy for everybody else to balance out, right? Because the problem is when you have incoming and outgoing, everything's balancing around. Because crypto happens very fast, even though it's inefficient in some ways. If you have the Bear and Lehman example, and you only have 2 or 3 prime brokers in the space, and one of them goes down, then it flings the other ones off the table too, right?
I do think you get 1 or 2 that make the move though, and you should see a string of others following.
Well, people are going to follow the right moves, right? And I think a lot of people are holding their cards, right? And they're like, what do you got? And it's like, no, what do you got? You know, and there's this sort of like poker face thing that's happening right now, because a lot of the companies are going through a due diligence phase.
100%.
And they're probably, if they're doing it right, they're going to take their time. Because no one wants to be the first one and fall on your face. You'd rather have the most bulletproof solution. You know, and I think that's what, to me, that's what you've seen as the major weak point in a lot of the DeFi stuff recently, is that people put their money somewhere and they trust that it's fine because they don't have the skill set to audit the code. They don't really know what's happening under the hood. Whereas, like, I think the bigger institutional clients, the bigger institutional managers, they understand that is the key thing, and they'll hire the right people if they can't do it themselves to like really go through and really audit where it goes, how it works, and make sure that they're fine, because they know that they're managing $1 trillion. They're not just some college kid YOLOing, you know, like they sold their VW Beetle and they're just YOLOing that money into wormholes.
But it's
or
our
something
jobs,
like that.
right? To educate these guys.
That's right.
And that's what we're doing for a living right now, isn't it? It's the thought leadership approach. 5 years is a long time in crypto, so maybe we're experts, I don't know. But our job is to go and sit in front of family offices, to sit in front of the banks, and that's how I spend most of my days now.
Right.
Giving them an update on, you know, these are your options, this is the market. And I'm just really the venue, the institutional venue, hopefully of choice, because no one else is taking an institutional only approach. A lot of the exchanges have a big retail offering. We just don't do that. We do have access to retail via retail brokers because of our FX client base, but we just have a small number of clients, 600 that we've onboarded in the last 5 years, that allows us to manage them, know them, understand their needs. But, you know, getting out there to these funds and asset managers and telling them how it works, being agnostic to all the different types of custodians, prime services, staking solutions, like services that I don't do, but I'm starting to understand the market. Giving them my go and talk to these guys and helping them get comfortable.
The fiduciary checklist is much different in crypto as a result of all these things that because the field is wider with more layers and there's more stuff that's possible.
And crypto has stigma that you need to really understand it way more than you would understand any other asset class you trade. Because people just trade for an exchange and they don't really care too much about the details.
Because it's a physical place though also, right? Like I know if I'm buying Swiss francs and I'm short euros and I'm long francs, like I know that I can like study Switzerland, right? And like it's a little bit more transparent in a lot of ways on the macro side, right? On the micro side, I don't know anything about the politics of Switzerland, right? So realistically, they could come up with some new crazy policy and it could derail things, right? But like they have a reputation, and that's the difference. Is like over time, the reputation gets sort of solidified, right? And you know, like some countries are always emerging and never getting there. You know, they're never getting to the plateau where they're an established market. They're always emerging, and I think that's where crypto is so different, because I view it as like this mosh pit in a lot of ways, where you have this sort of there's this sort of churn that's happening, you know, as money's coming in and fueling the energy to have everybody try new things and experiment and stuff like that. But then the rewards are so high, you know, because the alpha is so high, that you get this sort of clambering on top of each other. The people are sort of climbing up to try to get the thing. And there's this evolution that is happening right now, and we're watching it live, and it's happening way faster than people have seen it in any other industry, besides maybe the internet you know,
Yep.
like in the earlier days where there was 30 browsers and all this other stuff and everything like that. And I think we're going to consolidate, you know, just like everything does, into the best client solutions, the best services, the best prime brokers, the best exchanges. But we're nowhere near that.
Compress and fees will compress.
Absolutely.
We're nowhere near that right now. We're so early still, you know.
And people will care about low latency, things that, you know, we're very used to, and in crypto it's irrelevant if you have a physical data center. I mean, that's how we do things. We use fixed connectivity, but apparently in crypto world we need to have REST APIs and cloud-based servers. It's all very different.
Yeah, I mean, speaking of all the services, I mean, obviously we've both been in the space about the same amount of time, so we're probably talking to a lot of the same people. I mean, there's one particular asset manager, you know, $1 trillion plus asset manager that I've been constantly dripping on, you know, as far as education goes, and you know, I've known the guys for a long time, for about 5 years, you know, and it's just like, oh, well, what about this? What about this? What about this? And it's all services. That's all they care about. They want to make sure that the services line up to what their clients are used to what they're used to, that have everything in place. As a matter of fact, there's one, you know, one particular asset manager that I spent a lot of time with, that, you know, the interesting thing was I introduced to them, they finally got to the point of custody, right? I mean, there's pricing, there's reporting, custody is a big one. And I introduced them to, you know, 3 different custodians that are out there, and they looked at each one. They're like, you know, none of these are suitable. They're all built for retail, right? So that's probably where something where you guys fit in, because you building something that they're used to seeing. But there's all these hurdles that they have to get over, and some of them are starting to get over those hurdles. Like I mean, we're getting really, really close. I mean, we've got a big announcement coming here in a couple of weeks of 2 asset managers that we've onboarded with, that they finally got through those hurdles.
Yeah, the dynamics of client type has changed significantly in the last 6 to 12 months. So we have 35 banks that trade foreign exchange with us, and in 2018, I rang them all because we made it so that the API connectivity was the same, whatever the asset class is. The guys, you need to take my crypto feed, we're up already, spot crypto. And they all laughed me out the door. All 35 of them was like, good luck, let us know how you get on. Now they're calling me. Can I come into Canary Wharf? Can I come into the City of London? When are you next in New York?
And you're like this, you're like, I'm going to come in and, you know.
And I'm like, guys, what's going on? Like, the dynamics are changing. Now, can they trade spot crypto? No. Still regulatory hurdles, but how do they trade a future? You know, we're launching a future this year, a grown-up future, cash settled, a centrally cleared future as well, so the use of credit intermediation. And these guys are really excited because it's cash settled, they're not crossing any barriers on the regulatory side, and they're ringing us. And I mean, it's only been 5 years, so...
We're early, Steven.
We're early.
We're early
today. Early today.
Yeah.
Well, look, I think we've got to wrap it up here. I'm going to be in London in June. Would love to catch up.
Absolutely.
Speaking at a conference over there.
Let's do that.
Let's revisit this. This is a fun conversation.
I really like this conversation. I love London. I can't say no, you know what I mean? But yeah.
She's got a flat for us to say it, right?
Sure.
Oh yeah, for sure, yeah, exactly.
I bought it with Bitcoin.
We have to drive on the opposite side of the road, which I'm very experienced at, ironically. I actually am, you know, so it's funny. Okay, so thank you for joining us on the Bitcoin Bottom Line.
Thanks for having me.
I do have to ask this because we are at a Bitcoin conference, right? What is the one thing that you would like to see happen in the next, I don't know, the rest of the calendar year here in 2022 that you think would really increase the adoption on a like really crank it up? Is there one thing that you could...
Some form of US regulation to allow the banks to get going.
To the regulator clarity, I guess, right?
For us. Some framework that allows the banks to get going.
Okay, so that's marching orders. I'll take it. I'll make it happen. Jerome Powell's here, by the way. He's walking around.
I love it.
Yeah.
I love it. Well, thank you so much for joining us on the Bitcoin Bottom Line.